Hey everyone, thanks for coming. I really appreciate it. And if you're catching the replay, thank you for taking the time to do that. I hope you guys learn lots today, but really it's going to be a fairly quick presentation. I'm expecting it to be around 20 minutes to 25 minutes. And really, the, the reason why it's going to be so quick is because these concepts are fairly straightforward. So I'm going to stop my video and share some slides with you because I'm going to start talking about numbers in equations, and I want to make it as easy as possible for you all. And I think having that visual there is going to help you. So let me just share my screen here so you guys can see that. Okay, so you should be able to see my presentation there. So today what we're going to be talking about is how if you're in business, that more sales doesn't necessarily equal more cash, and really simplifying that process and taking some stress off of you as the business owner, and just kind of giving you some clarity as to knowing exactly what your sales targets should be in your business. So let's see here. Okay, so let's just kind of go over some basic stuff. Why do we get into business? It can vary, lots of different reasons. It could be to create freedom for yourself, and that could be financial freedom or time. It might be to support your family, retire your spouse, even just doing something for yourself, doing something that you love doing. Maybe you created an awesome product and you just want to share it with the world. But when we get into business, so a couple of things usually happen. We end up working our butts off. So that means that we don't have that financial and time freedom that we thought we would. We end up taking home less money than we expected. And because of that, we're constantly pushing for more sales, that I need more sales in order to have the money to be profitable and to take home to pay myself. And there's some common misconceptions about businesses and business owners. I know that some people who have never owned a business might look at a business owner from the outside and think, oh, you own a business, you must have all this freedom and you must be making a lot of money. But as a business owner, that's not the case all the time. And lots of times, especially in the online space, we'll see someone talking about that they had a great program sell out, they had a great launch, and they made $100,000. And we instantly think, oh, wow, that is amazing. They must be really profitable. Like they must take home a lot of money. And that business owner must have this awesome lifestyle, because that's what gets portrayed to us as the viewer, like through social media. But a lot of times that's simply not the case. With high sales revenues usually comes high expenses, and with poor cash flow management, you don't end up with the profits that it might look like you may have from the outside. So I'm going to share with you my story and how I got into this and why I promote profit first all the time, because I love it. But basically, I started my business about 5 years ago, and it's basically I wanted to do something for myself. Like I wanted to not have a glass ceiling on my income. Like I wanted to be able to make as much as I wanted without an accounting firm, putting limits on me. And so I started my business, and it took a while to kick off and finally get the sales going. But once I finally got that money coming in and was able to support myself, it didn't stop there. Like the passion and the drive for growth didn't stop, even though I was making enough to support myself. And I don't know why, but for some reason, I always considered I would be successful when I hit $1 million in sales. And I don't know why, like that is such a huge number, why I thought that. and maybe it's just because that's just a number that gets thrown around a lot, but I thought, like, I'm not going to be successful. I'm not going to stop growing this business until I hit $1 million. But then I came across Profit First, and I realized that my revenues in my business, um, they should be a reflection on what I want for myself and my family. And it is easy to figure out what that is if I had Profit First set up in my business. And I remember sitting down like a year ago with my husband after like a really long week. It was probably during tax time, and just being like, why am I killing myself? Like, what's our goals? Like, what do we want in life? Like, what what's going to happen in our life that's going to make us really happy? And based on that conversation, we figured out what we need our monthly wage to be. And then based on that, because I know my allocation percentages for Profit First in my business, I'm able to know what my sales target needs to be in order to make that happen. And to be awesome, or to be honest, it's nowhere near $1 million. It's much less. So that just takes off a lot of pressure that that can build up in a business when you're trying to grow it or trying to make the money and find the happiness that you want within your business. So today we're going to talk about how you figure that out for yourself. And it really is 3 very simple steps. First, you're going to figure out what your owner's pay percentage is. And I'm by that, I mean, what percentage of money are you taking home as a percentage of your sales? 2, you're going to figure out what lifestyle do you want to live? So basically, what money do you need to take out of the business each month in order to live the life you want? And 3rd is we're just going to reverse engineer those numbers to figure out your sales target. So that sounds pretty straightforward because, to be honest, it is. All right. Oops, went too far. So if you've been following me for a while, you know that I'm a Profit First professional and I talk about Profit First all the time. So if you don't know what Profit First is, it is a cash flow management system where you take a percentage of your total deposits for a period and allocate them out amongst different accounts, meaning by allocating them out, it's keeping your money separate in basically separate pools for you to use and spend so that you don't have a big lump of cash sitting in your bank account and you just spend it all just because it's there. So if you have Profit First set up in your business, you're going to be able to know what your percentage of owner's pay is based on your real revenue. But I wanted to show you this really cool chart. This is based on a lot of research done by Profit First professionals of historically financially fiscally healthy businesses. So businesses that are doing really well, they have good profit. This is what their allocation percentages are based on their business size. So you'll notice it's different depending on what level of income you fall within. So that top line, we're talking about real revenue. And what real revenue is your sales minus your materials and subcontractors. So those direct materials and direct subcontracts that are essential in order to make your sale. So for example, if you sell a product, it's going to be the cost of your product in order to sell it. So we take your sales less those materials and subcontractors, give us our real revenue. And then from there, we allocate it out amongst our profit, owner's pay, tax, and operating expense accounts. So you'll see in this chart, if your real revenue is up to $250,000, you as the owner should be taking home 50% of that real revenue. So that's a fair chunk of money, right? Like if your real revenue is at $250,000, 50% of that is 125K. So that's a lot of money. And I tell you that a lot of small businesses that size are not doing that. And it's just trying to get a good cash flow management set up to help you with that. So let's move on to our owner's pay, like the first step in this process. What do we do? So owner's pay is anything that you take out of your business for yourself. So whether your business is paying you via wages or draws / dividends, that's your starting point. But it also includes things like if they're paying for your cell phone, your car payments. I know some people put their groceries and clothes and stuff through their business, even though they shouldn't be. That's seen as an owner's draw and needs to be included in the total amount of your owner's pay. So here is an example of where you're going to find all this stuff. So this is just a screenshot from a sample company from a QuickBooks Online file. And so this is, I say just, when you are looking for these amounts, you're going to have to dig into your financial statements of your business. So I always start on the profit and loss and see if there's any wages paid out to you for the year. So for example, in this company, the owner's wages for the last 12 months was $50,000. So that's where you're going to look for your starting point. Then another place that you're going to look to find the total amount of your owner's pay is over on your balance sheet. And on your balance sheet, you're going to either have an account called shareholder's loan, due to shareholder, owner's equity, draws, and that's going to show all the amounts that you've been drawing out of the company. And that's going to include those little things like groceries and rent, little personal items that you take out of the business that aren't an actual business expense. And then you're going to want, when it's on the balance sheet though, you can't just take the balance right off of it, because that your balance sheet's showing an accumulation of all the transactions in there. So you're going to want to actually go into that account and see what all the transactions are for the period of time that you're looking for. And to be honest, I think you should be looking at like a 12-month period. So what you've taken out over the last 12 months. So for this example, you can see they took out $4,000 on top of the wages of 50 grand on the income statement. So total owner's pay in this example over the last 12 months was the $50,000 in wages plus 4 grand in draws. So they took out $54,000 out of their business. And I'm calculating the real revenue here. So we look at total sales. So we go back to our income statement. Our total sales here was 186,000, and the materials and subcontractors was 61,000. So we just take those two numbers, take sales less your materials and subcontracts, gives you your real revenue. So then you just simply take the total draws or wages, owner's pay taken out of the company, divide it by the real revenue number to give you your percentage of owner's pay of real revenue. So in this case, it's 43%, which, if you remember from the chart I showed you a couple of slides ago, a business of up to 250K should be taking out 50%. So they're just a little bit under that, but they're in a great range there. So that's our first step. So it's nice and easy just to figure out what owner's pay is. And I just want to stress here, do not overcomplicate this, okay? You can simply look at your financial statements and pluck these numbers right off of them. So your total sales, if you're questioning the materials and subcontracts amount, just think to yourself, the material, like if you're a service-based business, you might not even have any materials and subcontracts. That's that's very possible. Not all businesses have this, but if you're selling a product or if you have a service that is reliant on some sort of materials and subcontracts, then we include that in here. We don't include subcontracts of, say, like if you hire an advertiser, like a subcontractor that you pay that does your advertising, that's not included in here, because your sale is not dependent upon that subcontractor doing their advertising work. Like, they're going to help you make a sale, but there's no necessary work done in order for that sale to happen. So that, just to be clear on that. Okay, step 2 is my favorite part, and that's figuring out your personal lifestyle needs. So basically, how much money do you need each month to bring home to have the life that you want? And we're not talking the bare bones here. Like, we want you to figure out what do you need, obviously, to live comfortably with a little bit extra. It's like, you got into business to provide yourself with more freedom and money. So let's make that happen. So if it's paying off some debt, for me, it's having a house cleaner. Like, I want to have a house cleaner. So I build that into my my calculation when I do this. It includes, if you want to be traveling so many times during the year, saving, setting aside savings so you can retire early. You got to think about all of those items when you're figuring out what your monthly pay needs to be. So other things that we need to consider in this calculation is if you have a significant other that helps with your monthly bills, that who's going to be contributing to this lifestyle with you, because they're obviously going to be paying for some of it if they have a job. And then other things that may be coming in from other sources. So if maybe you have a rental property, investments, that child tax benefit, or maybe another side hustle that you have or job. So basically, we want to know all of the money that's coming in to help you create the lifestyle that you want. And really, the easiest way to do this is just open up an Excel file and do it. Excel's great for budgeting and doing stuff like this, and just list everything out. So I like to start with just the basics, like, what do I need in order to live each month? So that's like your mortgage payment, property taxes, groceries, all that kind of stuff. Then add on to that any savings you may have if you have an RSP emergency fund, and then the extras. So if you do planning a reno in the future, or just even some fun money that you want. So you basically would add up the total amount that you need to bring, you want basically to bring in each month to your household in order to live the life that you want. So the total, in this example here, you'll see the total money needed for this household is 10 grand. But the spouse in this relationship brings in 5,000. So as the business owner, I'm like, okay, great. I now know I need to bring home $5,000 each month to have a lifestyle that I feel really good about. And that's really important. Like, we want to be having the lifestyle that we're proud of, that can support us and our dreams, okay? So that those 2 steps are already covered. See, I told you we're going to fly through this pretty quickly because the steps are fairly easy. So now the 3rd step is reverse engineering those numbers. So we take what the owner's monthly pay needs to be to come home. So in this case, it was 5,000. Then we divide it by our owner's pay percentage of 43%. Is what we calculated in this example. So the total real revenue required each month is $11,900. That's the real revenue that the business needs each month in order to ensure that the owner's pay is being met. Now, in order to get the total sales needed for this business, we then take our real revenue number and divide it by what the real revenue percentage of sales was. So I'm just going to pop back to that income statement, and you'll see here that the real revenue in this case was 67% of income. Okay, so now we can go back here. So we're just taking what our real revenue required was, divide it by the 67%, giving us what our total sales needs to be each month. So $17,684 per month. That's what they need in order to support this. So total sales per the year in this case is what they need is $212,000, and their current sales is at $186,000. So you can see that we have a difference there. If this business owner were to continue on the path that they're on, they would not be able to bring home the money that they desire to bring home. So we have to fix that. So how do we adjust it? And there's two ways we can adjust it. One is increase our sales to support that level. So in this case, they only had to increase it. Well, that's actually a lot to increase within a year. What is that? 26 grand. So they have to increase their sales $26,000 in order to make their owner's pay goal for the year. Or the other way of doing it is working on your business, getting a proper cash flow management set up in your business so that you can increase your owner's pay percentage. And if you remember, a business of that size needs owner's pay of 250, or doesn't need it, but that's recommended for a business that size. Oh yeah, sorry, I showed the slide here again. So yeah, this business that we're talking about today falls within the 0 to 250K. So owner's pay really should be at 50%. So if we take our example, we take our owner's pay that we want to bring home, divide it by our target owner's pay percentage of 50%, gives us real revenue of only $10,000. And then we divide it by our real revenue percentage of sales, which was the 67%. So that number doesn't change either, because that's a cost of selling your product, basically. And that gives us total sales per month of $15,000. Sales per year of 182, which is less than what they're currently making. So you'll see, like, just by having your allocation percentages dialed in, this company is able to take home more money without having to increase their sales, without having to stress about, oh, I need to grow in order to pay myself more. That stops. All that frustration and stress and complication stops when you have a proper cash flow management system set up. So a couple other benefits of having Profit First set up in your business is not only we have that, which we just talked about, owners are getting paid a healthy wage to support their lifestyle. You're increasing profits in your business. And by profits, when we talk about profit in Profit First, we're not talking about when we look at our income statement and basically at the end of the day it shows a net income of whatever on there. That's not what we're talking about. Like, yes, that's going to be affected. You're going to have more net income on your income statement. But when we talk about profit, we talk about physical cash set aside in a savings account. Money that you can actually prove, like, and see grow as profit. It's not just a number on a financial statement. We also, when we have Profit First implemented, is money saved for tax time, and you're ready to pay it when it's due. So because we're setting aside money each month for our taxes, you don't have that stress come tax time of, oh my gosh, how do I owe this much money? Where the heck did all of my money go? Like, how is it even possible I owe money when I don't have any money in the bank? Like, it doesn't make sense. I get that question a lot from my accounting clients. So I see that frustration. And by implementing Profit First and having that money set aside come tax time is a game changer. I know it was a game changer in my business. I used to hate paying taxes. It was like I was taking money away from something else in my business that I could use. Even though I knew I had to pay it. It's a cost of doing business. It's a cost of we all got to pay tax, but it just felt gut wrenching when I had to do it. But now that I have that money set aside just for my taxes in a separate account, when it's time to pay it, I just pay it. I don't even have to think twice about it. So that mental shift has been really huge for me when it comes to having Profit First implemented in my business. And another thing with Profit First, it's just that understanding of where your money's actually going. That's so important. Like I kind of mentioned a little bit briefly a couple minutes ago, but I would sit down with my clients, going over their financials at tax time and telling them, okay, your net income was such and such and you owe taxes of this. And there was a disconnect. They didn't understand how that was possible. How can we be showing a net income on our financial statements but not have any money in the bank? And with Profit First, it shows you exactly where your money's going. And a good cash flow management system, to me, is way more important than understanding what the heck is on your financial statements, because cash is king. Cash is what's driving our business. Cash is what's pushing us forward and helping us grow and building these businesses that we want. And if we have no idea where that cash is going, it's providing you a disconnect. It's giving you this disconnect with your business because you don't truly understand what's going on. And you're not necessarily going to get that by reading a financial statement, but you're going to see that when you see the money moving through your accounts. And Profit First does that for you. And one of the last benefits that is the best benefit, I think, of Profit First is your quarterly profit distribution. So throughout the quarter, we're setting aside or allocating our profit amount to our profit account. And each quarter, you get to take half of that money out of that account and splurge on whatever you want. Because with Profit First, we already have an owner's pay set up. You're already consistently paying yourself. So this isn't part of your owner's pay. This is your bonus for having a profitable company. And when you first get started, it might not be very much. It might only be a couple bucks here and there, enough to go and get yourself a nice coffee or maybe a new book or just something special for yourself as a reward for having this profitable business. And it's great because for me, it's like a little game. Like I'm watching my profit account grow throughout the quarter, and I just want to kind of, like I set a target on what I want it to be, and then I get to dream about, okay, what am I going to buy this time with my quarterly profit distribution. So that's not the majority. I would say small businesses are not doing this, and they should be, because it's a game changer once you have it set up and get to take your quarterly profit distributions. It's pretty cool. But I'm just wrapping up here today. I told you we're not going to be very long, but don't overcomplicate this. Like, I feel like I just breezed through this. But the simple fact is it's fairly straightforward. It's fairly easy. And it's easy because it's providing, it comes with some clarity on the numbers in your business. So just to recap, you want to figure out what your owner's pay percentage is. So what percent are you taking out of the business as a percentage of your real revenue? Then figure out your lifestyle you want. What do you need to bring home to have the life you want? And then simply take that lifestyle number divided by your owner's pay percentage is going to give you your sales target. It's really that easy. And it provides so much more clarity. Like I was saying earlier, how that day I just sat down and was like, what the hell am I doing this for? Like, why am I busting my butt every month to grow when I don't need to be? You know, it's knowing that I only have to have a certain level of sales in my business is a relief that I don't need to be growing this for the next 10, 15 years. I can sit back and enjoy the fruits of my labor, and actually enjoy running this business. But that's all I had for you today. I hope it provides you a bunch of clarity. I hope that you're able to take what we talked about today, go back, implement it, figure out your numbers in your business, and go from there. Like, it's going to be eye-opening. You might realize that you have a long way to go in order to hit your goals, but at least you know where you need to be in order to do that. It's not some random hope and a wish to hit a certain point. It's an actual plan of what you need in order to live the life you want. But if you have any questions, or maybe you want to talk about how to implement Profit First in your business, please reach out to me. Send me an email at shannon@brunning.ca. I'd love to chat with you and see if I can help you in any way to get Profit First set up in your business, because it's a game changer. Thank you for coming. I'm going to go out and enjoy the gorgeous sunshine we have here today, and I hope you can do the same. Thanks for being here, and have a great day.